The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 9th, terrific Thursday edition of today's Opening Bell on the Trader's Edge. And I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. So, sorry, I got multitasking here, and so it got kind of interrupted there. I don't know how it goes here, I think. So let's go take a look at one of our tools. My apologies. Boy, I lost it again. If we've got some intermittent sound here, my apologies for that. I do not know what is happening there that would cause that. So let's just keep moving on here. So, let's go look at one of our tools, folks. This is the tool I call the 4 rules of decision making. Rule number 1, all important or difficult decisions must be made on paper. And let me say that again. All, and I mean all, important or difficult decisions must be made on paper. That means don't do it in your head, because when we try to do it in our head, we usually end up in what I call a loop. Now, I don't know if you've done this before, but I can tell you that I have, or I could say that I used to do this. You start out by saying to yourself, hey, that's a good idea. But then, what if this happens? And then you say to yourself, but what if I do this instead? Then you start to think about another alternative, and you say to yourself, but what if that happens? And then you kind of go back and forth. You go back to the first option, so you end up in what I call a loop, and it goes over and over and over and over again in your mind, and guess what happens? No resolution. No resolution whatsoever. Now, the worst thing about looping is that it adds to stress. Forget about the fact that you don't solve your problem. It just simply adds to stress, and that's not a good thing. And I believe that trading or investing decisions, they're important. And that means, folks, that you want to be able to write them down on paper. Rule number 2, be clear about what it is you really want and why you really want it. You have to have strong reasons why in order to be able to follow through. You've got to be clear about your outcome. That's what I love about pattern recognition. Fibonacci relationships, swing points, they help us to be clear about our outcome of the trade. And even more important, these tools help us to measure our outcome. Because if you can measure something and it's all down on paper, making a decision is 1,000 times easier. So the key to follow through on any decision is always to make sure you know what your strong reasons why are to move through with it. Rule number 3, remember that decisions are nothing more than probability. That's why you want to become a master of probability. We never wait for total absolute certainty, because rarely do we ever get it. Decisions are simply based upon probability. It doesn't matter whether it's trading or anything it is that you do in life. Rule number 4, remember that decision-making is nothing more than really value clarification. What I mean by that is that, it's hard to make a decision unless we know what our outcome is. And instead, what we have is, and you want to really make sure that, when you're making a decision, typically what happens is you're trying to attain simultaneous outcomes. So we go through this value clarification process. And what we need to do is we need to understand what those different outcomes for. Let me give you an example. When we trade a Gartley pattern, there are 5 outcomes that I'm looking for. You should be looking for those as well. The first outcome is the dead cat bounce, the 0.382 retracement. The second outcome is the 0.618 retracement of that pattern. The third one is the 0.786 retracement. The fourth, well, that's considered to be the 100% move of a move. You get right back to the X point. And the fifth and final, the ultimate outcome, is where the Gartley pattern turns into a new A to B equals C to. You see, whenever I take a look at a Gartley pattern, and you should do this as well, simultaneously, there are 5 different potential outcomes. And it really works that way in all kinds of decision making. So, 4 rules for decision making. Write these down. Number 1, all important and difficult decisions must be made on paper. Number 2, be clear about what it is that you really want. and know why you want it. Number 4, remember that decisions are nothing more than probabilities. Don't wait for absolute certainty. And finally, rule number 4, remember that all decision-making is nothing more than value clarification. Well, let's go try to make out some value clarification in the markets here. Right now, we've got the Dow futures. They're trading up 39 points, trading out at 16,446. S&P futures up 3.5, trading out at 1836 out here. NASDAQ futures up 550, trading at 3570. Russell 2000 up 3 points. King dollar up about 9 ticks here. Goldilocks down $1 right now, trading at 12.24. Silverback and nickel trading at 19.45. Light sweet crude up 42 cents. It's trading at 92.75. Our call-in number is 877-927-6648. Give us a call. We would be happy to take a look at your stock charts. Let's take a quick peek around the globe here. We're going to see over in Asia last night a sea of red out there. The Nikkei off 241 points, down 1.5%. Hang Seng off about 1%, down 209 points, as well as the Shanghai was off 0.8%. It was off $17. Over in the Europe right now, you got the DAX up 13 points, basically a flat market, and the FTSE down 1 point. So certainly a flat market over there. So let's start off by taking a look at one of the trades, one of the patterns that we were looking at yesterday. Let's take an update on this. Let's take a look at when we came onto the air yesterday, 9 o'clock in the morning. We were taking a look at price relative strength divergent patterns out there. And what we saw, and the reason why we were taking a look at it is to also, I brought that all back into taking a look at where are we at from the longer-term basis, the monthly charts, weekly charts, as we took a look at indexes, just so that you could keep things in perspective, because I don't want anyone to ever listen to the 2 hours that I do in the morning. And if I'm taking a look at shorter-term charts, such as this 30-minute chart here, for you to be making a decision based on a 30-minute chart, unless that's the time frame that you're trading in. And that means that if you are managing your longer-term funds, your retirement funds, then what happens on a daily basis out here, it's nothing more than entertainment. It's nothing more than many times than average daily movement out here. So I want to make sure that we always keep things on perspective. So it's a 30-minute chart here that we're looking at inside the Euro-US dollar. Now, one of the things that we took a look at yesterday was the longer-term charts to understand what that trend was. And when we took a look at the weekly, when we took a look at the monthly trend charts inside of the euro, even though it's had a nice bounce off the bottom, it was running right into resistance of a long-term downtrend out there, and we suggested that that was a good spot to be looking for short trades in the euro. Now, what we also recognized here was that we were going to get a bounce yesterday. And that bounce was because here's what we were looking for. Okay, if you're looking for short trades on an intraday basis inside the euro, you've got to determine where is it that you're going to go ahead and put up your fence. Where is it that you're going to take your position at? And inside the euro, U.S. dollar currency pair, what we drew in here was this descending price channel. This descending price channel that, in essence, took us back to kind of a longer-term chart where the euro was running into resistance. We had a price divergent pattern that had a nice little bullish engulfing candle that was forming at 9 o'clock. We had some follow-through at 9:30. Now, we didn't follow up on it, but what I did say, was that the price ought to bounce right into this descending price channel. That was drawn in before price had gotten up there. And what took place here at 10:30, and I apologize that we didn't go back and take a look at it, where did price stop? If you're watching us on TigerTV, what you can see here is price stopped right at that descending price channel. What did it do? It followed right back up with a little bearish engulfing candle at 11 o'clock yesterday morning. Pretty cool how it works, isn't it? Now, what happened was, as price went ahead and moved lower, and it moved lower, it made a little expansion of swing points. Now, when you are trading, what you always need to do is take, in my opinion, you need to look on the left-hand side of the chart, because that's where we've got historical data. And that historical data is going to help you to identify and understand where the bulls might be defending their position out here. And you certainly want to be able to use swing points as benchmarks for where something might trade into. When we talk about a 100% move of a move, well, in the case of the euro, it says, well, the 100% move of a move ought to take you right back down to that diverging candle that took place at 8:30 in the morning, and that was at $135.66 out there. What occurred yesterday as price bounced off that descending price channel out there? Well, price went all the way down into that area. In fact, what it did form out here, as we blow this up on my screen, went below that and made a little expansion below that. But what it did do is it made a little hammer candle right here at 1 o'clock in the afternoon yesterday. That hammer candle, that's important, that area here. And let's just draw a line across my screen because you want to understand, because bulls and bears, they are always working out there. They are always leaving signs for you. It's why, in my opinion, you want to be able to understand those signs, which ones to use. And they are very important because when they fail, especially a hammer candle, when you're long, you're wrong when you see it close below that. So now let's move forward. What took place here? That hammer candle acted as support. It was tested. It was tested here at about 2:30 in the afternoon. What happened to the area? You got a little bullish engulfing candle as well to join in on that hammer candle. That bullish engulfing candle took place here at about 3 o'clock in the afternoon. Now, it's actually this pattern right here. We're going to switch over and take a look at a daily chart of the Dow. But see how you got these small little bodies that are right in here? This is really a very powerful candle formation. I call this my U of M, my University of Miami. Of course, I guess you could say it's the because it looks like their logo out here. But let me not digress here. Let me try to keep on point. Got these small little body candles right here, and then this nice bullish engulfing. Now, this would have been more bullish, quite frankly, if it had closed above the open of this session here at 12:30. Didn't do that. Still a strong pattern, so you got a strong reversal pattern. It's referred to as a three-river morning star pattern out there. Now, typically, most traders only pick up on a three-candle formation. It's actually the candle formations that have multiple signals going across the bottom like this with small candle bodied that actually have stronger, I do mean stronger, turns. Now what are we seeing here? We saw the ECB came out with their interest rate announcement. Take a look at that bearish engulfing candle that took place between 8:30 and 9 o'clock. But look what's held it in place here. We know where the bulls are hanging out. We know where the bulls are hanging out. One might have gotten just excited as can be about this bearish engulfing candle. I have to say that Mario Draghi must be hanging out here at the lows. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to his subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Futures up 45 right now, and if you're watching us on Tiger TV, you can see my University of Miami logo out here. You know, learning is nothing more than, we're all visual. It makes it a lot easier for us to learn. And so when I started noticing this pattern, I'll go back to when I first started noticing this pattern here, because I don't consider myself to be a master when it comes to Japanese candlesticks, especially with regard to which ones you should trade and which ones you shouldn't, because there's a lot of noise there. There's a number of patterns in candlesticks that are nothing more than entertainment, because they really have no meaning, no significant meaning, at least with regard to a reversal, so you get rid of them. That's why I taught folks in that one-day workshop about candlesticks, because they are so useful in trading to understand where bulls and bears are defending their position. And it works in all different time frames, just like we took a look at the euro. Big, wide-ranging bar to the downside. That wide-ranging bar, markets don't usually end on wide-ranging bars, whether it's to the upside or to the downside. So Mario has his work cut out for us. The bulls have their work cut out for them, but we know where the fight is. Now, this is I call this the University of Miami pattern out here, or the hurricane pattern, if you will, because the pattern inside the candlesticks look like the University of Miami logo. I suppose I should take the orange color. If you're watching us on Tiger TV, you see the University of Miami logo out here. The U portion, that's really what it is that we are paying attention to, because that's what you want to be searching for on any time frames, on any stock charts that you trade out there. And if you are listening to your radio or your mobile device at TFNN.mobi, if you're not familiar with the University of Miami logo, go ahead and Google it when you get to a stationary spot out there, and you'll see what I mean. It's just the U that we're looking at. So now we're going to go back to the Dow. So where is it that we saw this pattern recently come in? Recently, meaning like within the last 5 years or so. Well, what you'd be, there are a number of different patterns that came together back at the 2009 lows, March of 2009 lows. Number one here, and we're taking a look at the Dow. That's what we're paying attention to. So at the Dow, as it was making its lows back in the low that we're talking about is March 6, 2009, it was making a nice 1.618 butterfly pattern. That pattern was off of the low of November 21st, 2008. That was at 74.49. Price runs up into the level on January 6, 2009, out at 90.88. Makes an A to B equals CD down, more than a 1-to-1. A to B equals CD down. Makes a 1.618 butterfly on March the 6th. And what I'll blow this up on my screen here, and what you can see here, if you were just a follower of just the Three River morning or evening star pattern, you would have passed up on this. But however, if you take a look at these two small-bodied candles, you see how this wide-ranging bar here on the trading session of March 10th, see how it closes over the downdraft session there? For whatever reason, I can't tell you why it works. I just know that it works. And if I know that it works, I pay attention to it. Maybe you should as well. We'll take a look at that bottom formation that had formed out there. Very obviously pretty strong, wasn't it? Because that may have been the low that none of us will ever see again in our lifetime out here. Now, as we fast forward into the stock charts out here, take a look at another time here where we see that similar type pattern, that little University of Miami hurricane pattern. Well, we saw it take place here when there was the first serious retracement back in July of 2009. Take a look at the downdraft candle, 3 small-bodied candles. Take a look at this one right here. You close right at or just slightly above the downdraft candle that was on in July of 2009. How important was that candle configuration out there? Well, I would have to say that was a pretty important candle configuration. Here's a 3-river Morningstar. Sort of. This is back in October of 2009, but let's not pay attention there. Let's come back and find some other instances of this pattern that we can see out here. You kind of have a junior one right about here. Here's, let me see. Let me keep pulling it back here. We're going to find them. You've got patterns that are out here that show the University of Miami hurricane logo pattern out here. They keep coming further. Here's your traditional 3-river Morningstar pattern. This took place back here in November of 2011. This is a very bullish pattern out there to be paying attention to. Again, it's more bullish when you have something like this, where you get multiple, let's say at least 2 small-bodied candles, and where I'm looking at is in June of 2012 out here. You've got a big downdraft on June 1st, 2012, 2 small-bodied candles, and that big up-thrusting there. And again, this session here on June 7th, when that body closed above and took out the downdraft session from June 1st, very, very strong low that was formed back in June of 2012, and it was courtesy of that Miami hurricane pattern. We had a retracement. You can see here, if you go and take a look at the retracement back in the June time frame, all the way up to the high that was put in here in October of 2012, you'll see a little bit more than a 0.618 retracement coming back into November of 2012. Remember, November 2012, probably the most recent significant low that we had out here, and what formed? Yep. You had that Miami hurricane pattern right out there. Folks, it works on all time frames. It's one of the more bullish patterns. Maybe just as much, and it forms a lot more often than an island reversal pattern. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 48 points, trading out at 16,511. S&P up 5, trading at 1842. Composite up 15 points, trading out at 41.81. Russell 2000 up 5 points, trading at 11.62. You got Apple up $2 and change, but leading the charge to the upside. Talk about leading. ICPT, Intercept Pharmaceuticals. These guys came out. They had a drug trial going on, dealing with liver cancer. And ICPT is a ticker symbol. Now, it's an IPO. We were talking about November in 2012. Well, October 11, 2012, this thing came out. The IPO low was $18.74. The high that trading session, $20.40. Right now, it's trading at $253. You want to talk about a gap up? $181, folks. So will that gap get filled? Boy, imagine if that gap really did get filled. This could be a game changer. Apparently, the drug study that was underway, they had, I think, was 238 patients. And they were using, they obviously had a placebo effect, and folks that were using it. And apparently the trials were so successful for the folks that were using it that they just simply stopped it. And now obviously all those placebo patients are getting the drug as well out there. So that's a beautiful thing. And I hope somebody there is an investor in this. Now on the Rhodes Momentum Indicator, it gave us a nice entry signal into this. I didn't pick up on it, but that's really what the tool was built for, was to truly understand the momentum in the marketplace, both on multiple time frames here. And this stock chart now with today's activity, if I back it up, it makes it a little bit easier. And this gave you on a weekly chart, gave you a nice little buy signal. Let me get my cursor out here, my crosshair. That took place the week of June 22nd, 2013 out there, and it's been in a nice buy signal mode, really a couple of cautionary time periods. But caution just means this slowdown. That's all that means. And boy, this thing is nice looking today here. Nice gain. You don't see that too often. It's up 281%, up $205 as we speak right now. And that is on Intercept Pharmaceuticals. You got McKesson. That is to the upside as well. MCK is the ticker symbol. In fact, let's go check in on McKesson. MCK. Good friend of mine from many years ago. He was over at SoftCell. That was back when I was in the computer business days. He went over to work in the IT department over at McKesson. Of course, that goes back into the mid 80s time frame. So time has passed. McKesson here. Let me see if I pull this back. Boy, McKesson's been in a nice uptrend, hasn't it? If we pull this back using the Rhodes Momentum Indicator on the weekly chart, this thing came and gave you a nice little buy signal. Took place right here in October 26, 2012 was the buy signal that you got on the weekly chart. Ever since that period of time, it's been in either strong bullish mode out there. I guess there was one brief period. No, take that back. I just need to pull this sideways. No brief periods. This thing has been in strong bullish mode. A couple of cautionary zones out here, but never on the weekly chart from a long-term holding standpoint to get out. It's over any resistance that it had formed out here. That was the week of December 9th, 2013. So McKesson looking pretty good here. It's up $5 and change. You got Pacira Pharmaceuticals, PCRX. I don't know what they do, but they're up 9% here this morning. Let's go check in on Pacira. PCRX is the ticker symbol out here. Let's see what it is doing, what its stock chart look like. It's trading up about $5, about 3% here right now. Again, if we pull this thing back, this thing gave you a nice buy signal on the weekly chart. Looks like that buy signal, boy, we're going to have to pull this back away, don't we? Where'd that last buy signal on the weekly chart? Oh, my goodness. That last buy signal on the weekly chart came in, looks like right here. Right, this was in September of 2011. Was when the last buy signal came in on this equity. PCRX is the ticker symbol. Right now, it's trading out at $65.64. To the upside, you got Amazon as well. That's trading up $4. GW Pharmaceuticals, that's up 11%. United Continental Holdings up 9%. Macy's up 7%. Let's check in on Macy's stock here. Ticker symbol on Macy's is M. Let's see what that is doing momentum-wise. Lead the charge, though, to the downside while we wait for the stock chart here to pop up on our screen. Bed Bath & Beyond, that's off about 11% this morning, down $8 and change. Signet Jewelers off about 6%. Family Dollar Stores down 5%. L Brands down 5%. Arm Holdings off 5%. Kihu 360 off 3%. Pier 1 Imports off 11%. See if some of these are out with earnings. Let's go back to Macy's. They were out with numbers here. This gave us a little buy signal that took place the week of October 21st, 2013 out here. And a nice, strong, very strong bullish mode as we speak here right now, both on the daily and on the weekly charts. That is in Macy's. Let's check out Bed Bath & Beyond. BBBY is the ticker symbol, so that is down. I'll switch over to a different charting application here. We want to take a look at the volume behind the move. Boy, this thing here now down below, it's how about that? This thing in one swoop down below the 200 period exponential moving average. Bed Bath & Beyond. Give me a moment here. Let's pull this up. Take a look at the volume coming out of it. BBBY. That is not a good sign for it. Oh, big volume so far out of this equity. Let's go try to figure out where it's going to tumble to, where it's going to find some support out here. So Bed Bath & Beyond has got this high volume hammer candle down here on December 20th, and that low is $54.33. It's trading at $70.90. Right now, it is taking out the swing point, so it's finally broken a swing point here to the low. It's done it big time. That swing point is from September 11th. 2013. The low there, 71.47, 1.9 million shares. Heck, it's taken it out already with 2.8 million shares as we speak today. So that says that this thing ought to, boy, it's had a couple of nasty downdrafts. When this thing does have a downdraft, folks, take a look at the personality behind this equity when it lets loose out here. You got a downdraft that takes you back to June 21st, 2012, does it with 17 million shares, big gap down. You had another big gap down on this equity here as it came back into, it didn't even get back to the breakdown area, but this had another big downdraft on September 20th, 14 million shares, another downdraft out here that we spoke about earlier, December 20th, and you've got another one in place here. Boy, what a psycho stock that is on Best Buy, Bed, Bath, and Beyond out there. Let's take a look at Signet Jewelers, SIG. Is its ticker symbol. Let's go see what it is doing out here. It's down. Let's go see what kind of volume is behind the move. See what Signet, maybe they were out with numbers. I don't see the actual numbers, but it is down with some volume. Let's go try to figure out where this thing is going to trade into. Looks like it's got a high volume swing point low down here, right around the level of about $66. It's traded at $75 right now. So you do have some volume off of the highs here. Let's see if it's had volume off the highs any other time. No, the stock has looked pretty good. So this thing here is having its trying to take out its swing point. Has not done that yet. The swing point that it's contending with here is from December 4th, 794,000 shares. So it's got the volume to take that out. But at this stage here, it looks like it's trying to be supported. SIG is the ticker symbol out here. So we got the Dow up 16 points. S&P is up 3. Let's go check in on the. I want to check in on the futures and see what we have going on out here at the moment. What we've got going on here. So going to be really focused on the NASDAQ futures. So the NASDAQ futures, what they did here overnight. Remember, the NASDAQ futures had been our weak link out here. That weak link had formed a 0.786 Gartley sell pattern that took place out here at about 11 o'clock in the morning. That was on January 7th, so 2 days ago. This pattern worked. It worked for a bit. Price moved down into the rising price channel that held it as support. That was at 7 o'clock in the morning, and that was yesterday. Now we're going to see if this rising price channel here can hold. What the NASDAQ futures did have was this nice wide-ranging bar. Had really two things that took place early this morning that we want to be paying attention to. Number one, as price pulled back this morning into the time frame of 4 a.m., it tested the bottom of that rising price channel. What it did was it formed a hammer candle. So that hammer candle is very important for us to pay attention to. The low on that hammer is 35.56.75. That's one thing you want to write down on a pad of paper, because if you close below a hammer, if you're long, you got it. You are wrong in the trade out there. So we're seeing the NASDAQ futures pull back. It's doing a retracement. If we take a look at that retracement, we're going to go from the hammer low to the high that was put in here at 5:30 this morning. You're going to see the 0.618 retracement. The normal retracement would be 35.65 is what we're going to call it. And right at about 35.65 is, in fact, where it would run into, or 35.64, 35.63, somewhere around here is where it would run into the bottom of this rising price channel. So we're going to find out here pretty quickly, because what the NASDAQ futures also did this morning here was it went ahead and it formed the larger 0.786 Gartley sell pattern. And we see some bearish candle signals out here. So now we're going to find out the fight between the bulls and the bears, who's going to win this fight. So you got a 0.786 Gartley sell. That's coming in off of the December 31st high inside the NASDAQ futures. That was at 35.94.75. So from that high all the way down to the low that was put in here Tuesday morning at, Tuesday at 12 noon. Well, I think it's 12 noon. Is it 12 noon or 11? 11:30 was at 35.05.75. If you go from the high to the low, what you'd see is the 0.786 retracement comes in somewhere right around the 35.77-ish range. The actual high was 35.77 at 5:30 this morning. So we know where to be paying attention to for the bulls and the bears out here. I want to also switch over on my screen here, something that you don't see taking place, but I want to see what the New York Stock Exchange is doing. NYSE is up 10 points right now, and it's got net advancing issues, 424. The key number to be paying attention to today is 836. If you see 836 or more net declining issues, that would not be good for the New York Stock Exchange. So there's the pattern inside of the NASDAQ futures. Looks like during the next hour and 15 minutes, we're going to get an opportunity to see if this little rising price channel, this little bounce, this little sell pattern, whether it's the bears now that have the upper hand, and we'll know that when we see this hammer candle broken to the downside. And that was also, not only was it just a hammer candle, right? What is it that we also saw here? Not the U of M pattern, not the hurricane pattern, but this was a big three-river morning star reversal pattern. So it's not just the hammer candle that is the important low at that 35.56.75. It's also a nice Morningstar reversal pattern out here. So we'll see if that level. So we know what we're paying attention to. We know what to be looking for. No reason to let our emotions get the best of us, because it's all really out here, and it makes it a little bit easier for us to trade. Let's take a look at the Dow futures. Let's go see what the Dow futures have done here as of recent. Now, the Dow futures, they had gone ahead and they formed this 0.618 Gartley sell pattern. We're making that 1.272 expansion. That was while we were on the air at 9:30. We saw that big old bearish engulfing candle that took place at the 10 o'clock session. And what the Dow futures did was they just simply made that 100% move of a move. They got back to the swing point low that took place at 1:30 in the morning morning on January 3rd, and that right now is a level of support. Let's just draw a line across here. We'll make that a black line. The expectation, well, it was the wrong button to hit. Try that. There we go. Black line going across the screen. So we can see where its level of support is. Now, I will say, remember if you didn't catch the opening of the show. I was talking about, decision making and the importance of knowing what your outcomes are, and because at any one point in time when you're making a decision, there's usually simultaneous outcomes that are taking place at the same time, which is the reason why you want to be able to put everything down on paper. And when it comes to trading a Gartley pattern, nothing could be more clear than the number of simultaneous outcomes that you should be looking at to determine reward to risk and whether or not you want to make a trade. And that first set of outcomes on any Gartley pattern is that it's going to retrace back to the 0.382 level. Let's take a look at these simultaneous outcomes that took place out here. We're going to go from this is Dow futures. We're going to go from the swing point low at January 3rd. Out at 16,336, all the way up to where that Gartley sell pattern took place. And our first outcome would be what I said, the 0.382 retracement. Now, the 0.382 retracement was at 16,418. Let's just do this here. Let's move the chart over to the side. We'll get rid of some of the data. Let's just say that's all that we knew at the time. Now, as price was moving down there, it was moving down with what? A wide-ranging bar right in the 0.382 level. Actually, dipped down to the 0.618 area, but it closed at that 0.382, right? And so a normal place for folks to get off of the elevator. Then what takes place, it moves down with another wide-ranging bar into the 0.618. Is that communicated anything to us? Yeah, I would say so. Number one, when you come into one of your expectation levels with a wide-ranging bar, that says, you know what, it's got more to go, because usually markets don't end on those wide-ranging bars. When I say markets, it's the time frame that you're really trading into. So the second outcome was achieved. The third outcome is what? The 0.786 level. Well, it comes into the 0.786 level, does that with a wide-ranging bar at 11:30 in the morning, gets all the way down and makes that fourth outcome, that 100% move out there. Now, because of price, the way that it came off that C point, remember the fifth and ultimate outcome of any type of a Gartley pattern is that it turns into an A to B equals CD. And really said that this should have been able to get down to 16,268. And it was unable to do that. Boy, that tells us that this little support area here is very strong inside of the Dow. And if that gets broken, something to think about. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 17 points right now. Let's go back to that futures contract out here because there's a lot to learn. Remember, when we take a look at, I was talking about certainly the 5 outcomes one should expect, one should be planning for when placing a trade on a Gartley pattern out here. And, of course, the way that the Dow futures came off of that C point with big wide-ranging bars really said that it should have got down to the 16,268 level, maybe even beyond that, maybe around 16,213. Now, of course, one of those places, the fourth element where you're always going to take a look at price stopping, is that 100% move of a move. And that is, in fact, what the Dow did. Now, if you go a little bit further back on the left-hand side of the chart here, you'll also see a couple of touch points that acted as a support level. Now, you didn't know it at the time, but that was back at about 10 o'clock in the morning at December 26 out there when you had the Dow futures get down to about 16,330. So 16,300-ish, 16,330 becomes a very important support. Now, what we can also see here is as price rose. This was coming into the time frame of 11:30 in the morning on January 11 o'clock in the morning, January 7th. Price got up to 16,496, so call it 16,500. That happens to be the top of the gap down that took place here, or very close to the top of the gap down that took place at 7 o'clock in the morning as we came back from the New Year's holiday. That level happened to be exactly 16,495 out here. So what the Dow has done, or what the Dow is doing, not only did it form that little Gartley sell pattern here, which did work, by the way. Just because price stopped at the 100% move of move doesn't mean it didn't work. In fact, it did work. Now what the Dow has done, the Dow is creating a sideways consolidation, the equivalent of, you do the math, 16,330 to 16,500. What is that, 165 points or so, 160, 70 points? Somewhere right around there. About 170 points is what we'll call it. So that's important. Why? Because consolidations will typically make that measured move, whichever side they break on. Consolidating markets are the most difficult ones to make money in because price chops up and down. And the most important thing that you can do is to try to identify when a consolidation is occurring as quickly as possible, because any type of system out there can struggle during those consolidated periods of time. In fact, if the markets for the next 12 months, which is a possibility, if what we're entering is a consolidation zone out here, it's going to be really important for us to be able to identify that as early on as we possibly can, because it changes all the different patterns that one would really use and rely upon. We should each have a bag of tools that we use for trading. You need something in your toolbox with regard to understanding momentum. patterns that are out there. So I've taken care of that with the Rhodes Momentum Indicator and trading strategies and the market scanners that are out there. And so markets that are trending, that works just fabulous. I mean, it communicates to you exactly what is going on in the market so that you don't have any of these head fakes out there. However, sideways markets, the chopping up and down, which is in essence what the Dow, this chart says it all really. Since December 26th out here, the market has been chopping up and down. Now, pretty decent trading range, 170 points or so, and that's important because should the market break one way or the other inside of the Dow, the expectation should be about a measured move of about 170 points. Remember, the Dow just finished a 1,000-point consolidation pattern out there. And if we take a look at where that would take price to, if I draw in the consolidating pattern here, to the downside, this says that price would come down to about the 16,180, 16,200 level. A break to the upside inside of the Dow, that would say, if I can grab this quick enough here, that would say what you'd look at is a price move up to about the 16,654 level. So that's all we've got time for today, folks. Stay tuned. The Money Masters show is up next. If you're off to start your Thursday, have a terrific Thursday. Thanks so much for joining us. Always my pleasure to be with you, and have a great Thursday, and we'll look forward to seeing you soon. Take care now. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.